Hey everyone, welcome to This Explainer. We are going to cut straight through the noise today. If you've got a UK student loan, August 2026 is bringing 3 massive changes right to your doorstep. We're breaking down the verified official facts, no gossip, no opinions, just the concrete data you actually need to know about the upcoming UK student loan reforms.
So, will your balance actually change? I mean, that's the £1,000 question right now, isn't it? For millions of us holding Plan 2 and Plan 3 loans, 2026 is literally a critical pivot year. The whole system is shifting in real time, and by the end of this analysis, you're going to know exactly how your wallet, your monthly payslip, and your long-term balance are going to be affected.
Here is our roadmap for today. First, the 2026 pivot year. Second, the 6% interest cap. Third, the SLC balance corrections. Fourth, the political wave and returning grants. And finally, your exact next steps. Let's dive right in.
All right, Section 1, the 2026 pivot year.
This is all about Plan 2 and Plan 3 borrowers. You probably already know the drill, but just as a quick refresher, Plan 2 covers undergraduate loans issued between 2012 and 2023. Meanwhile, Plan 3 is what applies if you took out a postgraduate loan. If you hold either of these, listen up, because these updates are coming straight for you.
Moving right along to Section 2, the 6% interest cap.
6%. That is the magic number here. Straight from a recent gov.uk press release in the official Hansard records, starting September 1st, 2026, Plan 2 and Plan 3 interest rates are officially capped at 6%. But it is absolutely crucial to note that this is a temporary measure. It's locked in for exactly 1 year.
Now, you might be sitting there wondering, wait, does this actually save me any money? Well, the impact is completely divided by your income bracket. If you're a high earner, so making above roughly £44,000, you benefit immediately from this cap because you would have otherwise been paying rates way higher than 6%. But for lower earners, you're essentially going to see no change. Why? Because lower earners are already paying RPI-based rates that sit well below that 6% threshold anyway.
To put those earnings into perspective, let's look at the repayment thresholds. Keep in mind, you only even begin repaying a Plan 2 loan when you're earning above £29,385 a year. The scale slides up from there, and those earning above £52,885 hit the absolute cap for interest rates. So if you fall into that higher bracket, this new 6% cap is absolutely going to lower the interest piling up on your account. Definitely make sure to check your payslips this September to ensure it's being applied correctly.
Okay, Section 3, SLC balance corrections. The Student Loans Company recently put out an official statement confirming that roughly 71,000 accounts were directly impacted by internal miscalculations. To put that into perspective, that's about 1.3% of all Plan 2 borrowers. It might sound like a small slice of the pie, but 71,000 people? That is a massive number of individual wallets messed up by a system error.
So how exactly did this happen? There were primarily 2 technical glitches. First, an interest calculation error where literally the wrong income data was used to calculate the interest applied to accounts. Second, there was an HMRC data mismatch. This specific glitch mostly caught out borrowers who were balancing both standard PAYE employment and self-employed work. The systems essentially just failed to sync this dual income data correctly, which led to totally inaccurate loan balances.
Now, if you're dreading spending hours on hold with the SLC, you don't have to. Here is the actual resolution timeline. Starting in August 2026, the SLC will automatically correct these accounts. By September, those statements get updated in the system, and any refunds for overpayments are going to be issued automatically. Your job is super simple. Just wait until October 2026, log in, and verify your annual statement to ensure the correction actually went through.
Which brings us to Section 4, Political Wave and Grants.
Zooming out to the bigger picture here and strictly reporting the parliamentary facts without taking any sides, over 120 MPs recently signed Early Day Motion 6448. In this motion, they are calling the current system of frozen repayment thresholds and high interest completely, quote, unsustainable. It's a verifiable fact that significant cross-party momentum is building right now, with politicians seriously questioning whether the Plan 2 structure can even survive in its current form.
And in response to that mounting pressure, while the Department for Education hasn't launched a full systemic review just yet, BBC News confirmed a pretty massive concession. The government is officially bringing back means-tested maintenance grants. Starting in the 2028 to 2029 academic year, disadvantaged students will be eligible for non-repayable grants of up to £1,000. This is a huge shift back toward direct financial support rather than just purely loan-based aid.
All right, wrapping up with Section 5, your next steps. To stay totally informed and avoid any unnecessary anxiety, just follow this easy 3-step checklist. Number 1, log into the Gov.uk portal and confirm your plan type. Are you Plan 2 or Plan 3? Number 2, set a calendar reminder to monitor your September 2026 payslip, just to make sure the new 6% interest cap is being properly applied if you're a higher earner. And number 3, check your October 2026 statement to confirm that any automatic SLC balance corrections have actually hit your account.
So that leaves us looking just over the horizon. With all this massive political pressure mounting in Parliament, system errors forcing widespread corrections, and maintenance grants already making a historic return, we really have to ask, is this turbulent 2026 pivot year just a temporary fix, or is it actually the beginning of the end for the current Plan 2 structure? Let that sink in as you check those statements this fall. Thanks for joining this explainer. Stay focused, stay informed, and we'll see you next time.